Ed, thank you so much for coming.
Thank you for having me.
Well, I was talking about Michael's article, as you noticed, I'm sure, stock market crash or mini correction. Before we go to that article,
Yes.
can we talk about today? Because we see that S&P 500 futures rise on report of budget plan on the speculation that they're going to solve this problem because he's calling everyone to the White House and everyone is hopeful. Are you hopeful that this is going to be resolved? The fiscal cliff is going to be resolved?
As an American, I'm hopeful that it's resolved because it's not going to be good for the country and will be very bad for the markets. Fiscal cliff is nothing more than will the tax cuts that President Bush enacted, will they be extended? If they're not extended, taxes rise for about 120 million households, which is a lot of households. America is roughly 310, 315.
How many households?
120 million.
120, yes, that's a lot.
That's a lot, right? That's a lot of households. So that, for markets, is very deflationary. That means money comes away from consumers and goes towards the government. So it's not good for markets. I'm hopeful it's resolved. I don't know that it's going to be resolved. There are a lot of real structural issues that both parties have about revenue and about taxes, about entitlements. So it's unclear whether it's going to be resolved, and I suspect it will be months.
Oh, do you also then agree with Al Arian that they're just gonna buy some time? We're gonna be talking about this 6 months in a row. Is that what you're saying?
I mean, I think that's, of course, what they're going to try to do.
They're going to put a Band-Aid?
They are going to try to do that. The question for investors right now
Yes.
is markets are now bringing this into focus. So markets are now focusing on it. And if the markets focus on it, meaning if the S&P 500, if the rest of the markets keep going down while they do not reach a deal, that will create a lot of pressure on them to reach a deal, but also, unfortunately for investors, create a lot of pressure in markets. Markets don't like when there's uncertainty.
Uncertainty, and we had lots of uncertainty, you're right. And the market has been, S&P 500 has been down, what, 5.5% since Obama was reelected?
Right.
Do you expect, if given the scenario that they won't reach a deal, do you expect more going down the hill, and how much? What is your projection?
Yes, I think that if they do not reach a deal, or if what's going to happen, what I said before, as markets now bring this into focus, this issue, it's going to dominate the news. So we're going to rise and fall on, if it looks like they're making a deal, maybe markets catch a bid, they go up a little bit. If it looks like no deal, they go down. So I think that if they do not make a deal, yes, the markets will continue to go down. But mind you, the markets have been going down really since September 14. U.S. markets peaked right around the time of the QE and have been going down. In fact, when you look at small companies in the U.S. here, they're down about 25%. Apple's down over 20%.
So you're saying even before the election, it's been going
Yes.
down. Why?
There's a lot at work here. Why is, one, the economies around the world are slowing. It's very clear now that there's an economic slowdown. That means the economic pie is shrinking.
That's true.
Right? It's shrinking. This earnings season for U.S. companies, what's called forward guidance, which is when companies talk about what does the future look like to them. They're all talking about lower guidance going forward, and they're waiting. They're waiting on taxes. They're waiting on fiscal cliff. They're waiting on healthcare costs. Every time someone waits, that's somebody else's missed sale. Right? Anytime you or I wait to buy something, that means someone else missed their sale. So the numbers are getting smaller going forward. Markets are getting very worried about it.
Especially the corporate profits, I hear that you're worried about. So do you expect, just like Mark Faber said, a 20% down from S&P 500's peaks of September?
Yeah, in our work, right? So we use these ATAC strategies we use to manage both our mutual fund and our separate accounts. We have been in bonds, actually out of stocks, going back to mid-September. We think, it looks to us right now, that all the pieces are in place for the market to go lower. And there's a lot of now very nasty geopolitical events going on, right? Besides,
Are you talking about the Middle East?
of course. So you have the Middle East now is now in focus.
Everyone's watching.
Is now watching, right? You have U.S. fiscal cliff. So there's a lot of issues that any one of them are not good for markets. So that all the conditions are correct for markets to keep going down.
And what does Sandy play a role in this? Because we've seen the unemployment going up, We've seen the industrial production going down today. The retail sales yesterday went down. I mean, in fact, they were down for 4 months in a row, and unemployment went up 18 months, right?
Right.
They all related to the Sandy hurricane, the superstorm. And how are we going to see the GDP? I mean, what do you think about the effect of Sandy? Because we've been receiving these economic data from the U.S., and they're not very bright either.
Right. The Sandy data will be reflected as we go forward, right? Because when we get data numbers, data is always backward looking, right?
Right.
We measure what happened previously. So the Sandy data will reveal itself in the months ahead. Again, it's not going to be good. I'll tell you an interesting story. I was out last night after leaving work after dinner. My offices are in a very popular part of New York City. Normally, when I come out of downtown,
Are you affected by the hurricane?
we had no power, but our offices were
Not flooded.
Were not flooded.
Good.
But interestingly, that hour of the night after dinner, normally can never get a taxi. Many taxis. And I asked the taxi driver. He said, "Yeah, right now we have no business. The city's very quiet." So I suspect it's Sandy. It's high gas. It's so we'll see that be solved. And in the U.S., of course, the East Coast is one of the most productive parts of the U.S., so it will have an impact.
Northeastern got impacted very, very badly. You're right. And let's go back to Michael's article, shall we?
Sure, please.
Stock market crash or mini correction. He wrote this detailed article about it. What is he giving us as a message here?
The message is that right now investors have to be very worried about what is the message of the bond market. We spoke about something, we talked about, so in QE3 was supposed to help economic growth. Yields have been dropping. So the yield on the 10-year is now at roughly 1.6 or so,
yeah.
right? The 30-year well below 3 and falling and falling. Now, falling yields are a sign that money is going to the safety of bonds. We have that together with a rising dollar. A rising dollar and falling yields have been the precursors of global macro events, meaning that there is something, maybe there's bad news coming out of Europe. We haven't even spoken about Europe is back in the headlines, right?
Exactly.
So what's happened is you have yields dropping. The stock market was kind of holding, but now the stock market's dropping with yields continuing to drop. The bond market, if the bond market's right, stocks are going to come down quite a bit, maybe 20%. If the stock market is right, in other words, meaning if things turn out to be not so bad, then it will just have been a correction, maybe another few more percent.
Ed, you told me you've been heavy, you weighted more in the bonds as opposed to the stock market, equity markets, so you're investing more in the bonds. Are you taking your money out of the stock markets? What is the ratio, if you can give us a
Sure, of course.
clue about your investment strategy?
We run a very dynamic model. So we change our positions actually weekly based on conditions. So going back to September, for us, our mathematical work told us that conditions were deteriorating to be in equities, not good conditions. We sold all of our equities. We went to the safety of bonds.
All of them?
All of it.
100%.
100%. But that's how we normally trade.
Weekly,
So,
yes.
Right. So I don't want people to think that we never sold any stock ever and suddenly we woke up and said, oh my God, we should sell everything. We often do this.
Yes.
We are 100% in bonds. We have no stock market exposure. And I could tell you that our work is actually deteriorating, meaning our indicators are going further negative.